Hello everyone. I'm going to explain about the main differences between average profit method versus super profit method of valuation of goodwill. These two methods are adapted mainly in firms to calculate the valuation of goodwill. In this video, we are going to learn about the differences between the both mainly. When valuing goodwill, two common methods are mostly adapted, namely average profit and super profit method. Each of these methods has its own approach and is used for different circumstances depending upon the financial situation of the company. Here we are going to learn in detail about the differences between them. In order to compare the differences, we must understand the meaning of each method. Average profit method. The average profit method is one of the simplest and most commonly used methods for valuing goodwill. It involves calculating the average of the company's past profits and then multiplying the average by a certain number of years. The steps involved in average profit method. These are all the main steps to be followed to calculate average profit method. Determine the past profit. The first step is to ascertain the past profit first. Then the second step is to calculate the average profit. As we all know very well, we have to sum all the profit over the years and it has to be divided by the total number of years which will be easy to get average profit. The third step is to multiply by number of years profit so that we will easily get the goodwill by using the formula average profit into number of years purchase. Then the various characteristics of average profit method. The first character is simple and straightforward. It is easy to calculate simply and it is a direct method which can be understood easily. The second characteristic is based on historical data. This method always prefer previous year's data or the company's past performance. Then this method does not consider industry standards. It never compare the company's profit with the normal profit of the company. So it does not compare the company's profit with overall industry of the business. So these are all the main characteristics of average profit method. The second method is called super profit. Under this method, the valuation of goodwill is done on the basis of excess profit that a company earns over and above the normal expected for its industry. This method is particularly useful for companies that consistently outperform their peers. The various characteristics of super profit methods are: this method considers industry norms and it focuses excess profit and it is more realistic when compared to average profit method. So why do we call this as a realistic method when compared to average profit method? Means this often provides a more realistic valuation of goodwill when compared to average profit because it mainly focuses on excess profit. It values only the portion of profit that exceeds the normal rate of return, reflecting the company's competitive advantage. Then the main differences between both has been explained in a table format. Various aspects has been given one by one. On the basis of those aspects, these methods are compared one by one. On the basis of calculation, when as far as average profit method of calculating goodwill is concerned, it is mostly based on past year's profit. We have to calculate past year's profit average. In case of super profit method, here excess profit over normal profit is ascertained. Then industry norms consideration. Average profit method does not consider industry's normal rate of return, whereas super profit method considers the normal profit based on industry standard. So industry standard is taken into account in super profit method, whereas average profit does it consider the industry norms. Then profit focus. Total average profit is the main factor in case of average profit method, whereas super profit method focuses mainly on the profit above the normal return. Average profit method is simple and straightforward, whereas super profit method is bit complex when compared to average profit method. Then applicability. On the basis of the factor called applicability, this average profit method is suitable for companies which run stably for a long period of time and which has average performance can adapt this average profit method, but whereas super profit method can only be ideal for companies with above average performance and competitive advantages. So resulting goodwill value is the next factor to be considered to compare average profit method and super profit method. Typically, average profit method yields higher goodwill value compared to super profit if the company is average performing. But under super profit method, it can yield a more accurate value when the company has consistent excessive profit over a period of time. So these are all the comparison between the two methods. Thank you for watching.